Policy, politics, and the pandemic are on the agenda as Chinese leaders get set to chart the way forward. Hi everyone, I'm Sean Caleb sitting in for Anna Naidu, and this is The Heat. Chinese government officials will meet later this month at this year's Central Economic Work Conference to discuss the country's economic performance. These discussions are expected to center around China's recovery from the pandemic and economic goals in its latest five-year plan. Forecasters are predicting a growth rate of more than 8% next year, driven by consumption, manufacturing, investment, and exports. However, questions remain about the impact of the global pandemic and the approach the U.S. President-elect Joe Biden will take toward Beijing amid the ongoing tensions between the two nations. There is a lot to discuss, so let's get straight to our panel. William Li is a chief economist with Milken Institute here in Washington, D.C. Liang is an economics professor at Willamette University in Portland, Oregon. Einar Tangen is in Beijing. He's a political and economic affairs commentator. Also in Beijing, we are joined by Gong. He is an economics professor at the University of International Business and Economics. Thank you all of you for taking time to chat with us. John, I want to start right with you. For everybody who's not in tune with all the inner workings about how China works, how it's going to cast its economic net forward looking ahead, tell us about the Central Economic Work Conference. Who attends? What is the role in determining policy and economic factors? And really, what goes into so much of this decision making?
China's economy is functioning quite differently from the rest of the world. You know, we still have a very strong government here. We have policies implemented via several quite important ministries. There will be also financial backings coming from the central government. So I think the government's policy setting is very important. It sets the tone, it sets the targets, it also sets the plan and also the fundings injected into the economy. So I think this process is quite unique, and this system has been performing quite well over the last 30 some years, and this is just the traditional way of doing things. And I think this year it's going to be particularly important because we have a very different environment, we have a very different global environment. So a lot of things are expected to come out of this work conference, and we're starting to see what the messages will be like. Through press reports in the last few days, I think there could be some quite significant developments moving forward.
Interesting. Einar, talk to me just a bit about President Xi Jinping thinks that growth could be as much as 8% moving forward. Firstly, what needs to happen to reach that goal, and how much of this is going to be done basically out in the open, in the public, so people can watch the discussion, watch what goes into play to make up this equation?
Well, you want to pay a lot of attention to jobs. Last year they shied away from making GDP targets, and what they're looking for is things that they can measure now. So job creation, for instance, this year they had a goal of over 9 million. They reached that 2 months early, and they're expected to have more. Well, the quality of jobs comes into question, but China is able to do this. And you also start looking at disposable income. This is going to be very, very important. After all, in an economy which is expanding based on services, it's very important to have people having a little extra money in their pocket and the confidence to spend it. So at this point, Xi is very bullish on the Chinese economy, but he's not the only one. You go across the world, you're seeing a steady momentum up from, remember last June, everyone said, 1% for 2020. Now they're at 1.9. It's possible that it'll go above 2%. And then next year it should follow on. The big issues, though, are what happens to the global demand and what the after effects of COVID-19 are in terms of health.
And Liang, China's recovery rebounded significantly in the second and third quarters. It is there that forecasters, not President Xi Jinping, are predicting the economy will grow by as much as 8%. What the president has said that he hopes China's economy will be able to double by the year 2035. Talk to me about these forecasts, and is the assumption that the economic crisis has largely passed, or do any decisions and forecasts still need to take into account a residual effect or additional wave from the coronavirus?
Right. So the forecast or the objective of growing, doubling the size from 2020 to 2035 would require an economic growth by about 4.8% per year. And that is pretty consistent with the recent trend of China's growth. If you remember, before the pandemic, back in 2019, China is growing at the 6% rate, which is lower than its historical average, but it's probably the new normal. So when you put the number in perspective, next year the forecast is 8%, which is coming from a very low base of this year's about 2.5% of growth rate. So it's it's not unrealistic to think that China is going to grow at 8% next year and contributing to about a third to global GDP growth. Going forward, I think to achieve 4.8% annual growth rate, again, it's plausible, it's realistic, but there are definitely headwinds. In the short run is how we're going to continue to solidify the growth and recovery, knowing that a lot of the recovery this time around has been driven by export growth. And that may not sustain in the months or years to come. So how to foster domestic demand growth, especially consumption demand growth, and also how to really innovate and develop this domestic indigenous technology. I think those are very significant challenges facing China, not to mention financial stability, etc.
Absolutely. William Li, I'd like to just pick up a bit on what she was just talking about, because a global survey by the U.S. television network CNBC shows that China's economic growth out of the pandemic is leading the world. And I think that a lot of people certainly are praising China for the way it has moved forward out of this pandemic and kept its economy really driving the global economy, if you will. How do you see the Chinese economy shaping up next year in, hopefully, a post-pandemic world?
Well, at the core of China's new five-year plan is this dual circulation strategy, and it's going to be facing essentially two challenges. One, internal, is to boost domestic demand and to really do a delicate shift from public consumption to private consumption, because China really wants to bolster household consumption, which fell by about 5 percentage points of GDP and is back to where it was 5 years ago. And the challenge now is to boost the private consumption, at the same time roll back public consumption to contain the growth of the deficit and debt burden. On the other circulation, the external circulation side, China is going to have to show the world that because it is already ahead of everyone else, it is also going to act as a locomotive for the rest of the world. And in doing so, it needs to import more of the products of the rest of the world. And opening up trade with the rest of the world is going to be a key challenge, and that'll be something they're going to have to deal with the U.S. New administration, as well as the Europeans and all the other governments of the world, to be able to ensure everyone that China's involvement in regional alliances does not cut it out from a global perspective.
John, let's talk about China's imports, if you will. China, according to Customs Agency, the country's trade surplus jumped $75.4 billion in November. That is up 100% from last year. Now, factory surveys are reporting surging orders right now. How much of that is related, do you think, to the economic pandemic?
Yeah, well, I think the trade picture reflects the difference between China and many parts of the world in terms of containing and fighting the pandemic. You look at the exports numbers; they're doing great. The imports numbers, they are just barely breaking even, not making a lot of increases. So I think it reflects the fact that in many parts of the world, the economies are being affected. There are lockdowns. There are a big impact on manufacturing. So that's what we're seeing right now. And also, I think it's a lot to do with the very depressed prices of many major commodities. For example, for coal, for iron ore, for oil in particular. That's the situation we're facing right now. But I think what's good is that China's exports are still doing very well. That means that it has a huge trade surplus and beefed up foreign exchange reserve. And I think that laid the foundation for increasing more imports moving forward. I'm pretty convinced that China's government has a policy of trying to balance trade to the extent possible. It's not going to be sustainable for the world's largest trading nation to keep such a large trade surplus over a long time. So we have to increase imports. And I think China is doing many ways trying to increase imports as well. For example, last month we have the probably the world's only import expo in Shanghai. That's an annual event. Basically, it's a big venue for foreign companies to come to China to sell. So these are the measures that the Chinese government will adopt, trying to balance trade, and this is going to be probably very good news for many parts of the world.
William, let's talk about the world's two largest economies and how important it is for these two economies to work together. As expected, we know that President-elect Joe Biden just a short while ago announced that he is going to nominate Katherine Tai to be the next U.S. Trade representative. She is someone who speaks Mandarin fluently. She has an amazing working knowledge of China, its economy. And one quote that jumped out at me, and I want to read this to get this correctly, she is expected to treat China with an iron fist wearing a velvet glove. What do you make of this, firstly? And she is expected to be tough on China.
Well, it's a reminder that the Democrats have always been very tough on China in terms of demanding high quality work standards and human rights as part of the trade negotiation package. So the challenge really is for these two largest economies of the world to really redefine the trade framework for the 21st century, to not only worry about the trade in goods and services, but the key is to have the high value added services created a framework where intellectual property is protected and markets, domestic markets are opened up to the other countries of the world. And that framework was something that I think the U.S. and the Trump administration was trying to engage with China to develop on a bilateral basis. And I think with some success, but I think the key challenges would be those intellectual property and market access clauses that are supposed to be part of the phase two, which now are going to be challenges for the new Biden administration as well as the Xi administration.
You know, and John, also President-elect Biden has made it clear he's not going to change anything that U.S. President Donald Trump is doing with China right now for at least the first 100 days. You were quoted in the South China Morning Post as saying, talking about the trade representative Katherine Tai, she knows the complexities of China. In terms of exports, how do you think that is going to kind of shape this global trade? And what did you mean by your comment?
Well, I think Joe Biden's interview with New York Times reflects the fact that he is not going to remove the tariffs right away without probably any conditions. But I think at a very fundamental level, President-elect Joe Biden is opposed to tariffs, and he understands that this thing is actually a lose-lose situation for both countries. It curtails exports from China's perspective. It also increases, basically it's like a tax to American households, because at the end of the day, the tariffs are indeed paid by American households, and there are numerous studies pointing to that fact. On the order of something like $800 per household on an annual basis, and that's a lot of money, and it's a lot of money, particularly in this year. So I think over the long run, these tariffs will have to be gone. It's just that he needs to muster some political capital to remove these tariffs, and probably he also it's in the United States' interest to get something back from China, to get something some concessions from Chinese government as an exchange condition for removing these tariffs. So I wouldn't be surprised that he says that, but I think within several months, I think, and most within a year, I'm quite convinced that these tariffs will be gone, or they have to be gone. And I think that under the Biden administration, Sino-U.S. relationship should at least witness some adjustment. And speaking of Katherine Tai, I think having experiences in China and also being very front in Chinese and being working on China's issues in the past within the USTR. At least I think she have a quite different perspective from Liang probably in terms of trying to work out some solutions, some kind of working relationships with Chinese government. She is supposedly to be a very good negotiator. She is solution oriented. And then hopefully things go better under her leadership at USTR.
Smoother waters, hopefully. Liang, we talked earlier about how China is pulling itself out of the economic mess that was really caused by the pandemic, especially when you compare it to the United States, the UK, the EU, and other parts of Asia. And obviously, China is moving in the right direction, and they have these very optimistic goals and outlooks coming up. But to what degree do you think all the economic problems in other areas of the world could play into this? I mean, certainly no one predicted a pandemic 1 year ago. It's very difficult to plan your economic future and hope everything works just perfectly.
Right. So I think there are two important implications, how the rest of the world evolves out of this pandemic. One has to do with the global trade, global investment, that global supply chain. There's evidence that has suggested that now companies are increasingly regionalize their supply chain. So that could have some impact on China. And China has taken this proactive action, right, building this regional trade and economic partnership. So I think China is still kind of anticipating these kinds of changes and take actions. And then the second point, of course, is there will be more complex environment going forward. There will be more competition between countries trying to grow out of their economic recession. So you would see rising protectionism. That's when that would have some negative impacts. But on the other hand, there may be more collaborations on public health issues, on global trade investment, and try to find those common ground for technological innovations, for climate change, etc. So I think there are opportunities, but there are also challenges. And I want to go back to the point where you asked about imports. So one thing that we know is imports are a sort of a lagging indicator, just like retail sales that are slower to recover compared to industrial production. So I think as China continues to grow and its income continue to rise, we'll see more imports from China. Not to mention, import services are very important for China, right? When you think about international travel, tourism, education, China has done a lot in the past, but right now it's just, the rest of the world are still in the lockdown mode.
Right.
So once that changes, I think that would again boost China's imports.
And William, let's talk about trying to pump the brakes and all the tension really that has developed between the United States and China moving forward. The Trump administration really concerned about security and technology and barring American firms from investing in companies that the U.S. says are controlled by the Chinese military, cracking down on China's role in telecoms and adding China's top chip maker, as well as the oil giant CNOOC, to a blacklist of alleged Chinese military companies. Firstly, I want you to listen to what the Chinese Foreign Ministry responded to this blacklist. Hear what they have to say.
China firmly opposes the U.S. suppression of Chinese firms unreasonably, and China has repeated many times China's position. The actions by the United States have violated the principles of market competition and international trade that the U.S. has always been promoting. It will also seriously damage U.S. interests and image. Chinese firms have always been operating according to local laws and regulations. The U.S. should stop abusing the concept of national security and stop suppressing foreign companies.
William, your thoughts on that?
Well, Sean, as I said earlier, the greatest challenge facing China now is to reconcile the dual circulation strategy of developing its domestic standards, domestic demand, and developing its core industries to be at the frontier of, say, chip making and 5G and all of the internet-type technologies. At the same time, it needs to be part of the world. And I think one of the things that we should keep in mind is that it wasn't just the U.S. that was concerned about the security nature questions, but also it was a multilateral concern. Australia, UK, Germany, a lot of countries expressed this concern about a monopolistic supplier of material to power the 5G systems around the world. So I think these are the issues that I think will be discussed with a Biden administration with an eye toward a multilateral global agreement whereby we can ensure mutual security and transparency, and at the same time be able to allow each country to develop the tools and instruments to which it has a comparative advantage. And I think one of the things that U.S. has always been good at has been financial services and entertainment services. I mean, look at all the movies that we've produced, and that we need a market around the world, including in China. And at the same time, China will have to ensure that its instruments that it exports to the rest of the world will satisfy the security concerns of UK, Australia, and so on in Germany. So I think one of the things that we need to look at forward is a framework where the 21st century trade in goods and services can be developed in a way that is transparent and gives enough accountability for each side to be satisfied.
Einar, one of the great things about this job I have is getting to travel around the world and spend time chatting with someone like you. And we've had a lot of discussions that have gone on for some time about China wanting to open up to the rest of the world. Now, tell me how you think that is going to be critical this year, especially considering the turbulent waters that the U.S. and China have gone through this past year, and talking about what William was just discussing, allaying a lot of the concerns that not only are here in the United States, but in the UK and in the EU as well.
Well, that's one of the interesting parts here. We seem to be talking about the U.S. and China as if it's the whole world, and the fact is that's only 40%. 60% is the rest of the world. Now, you look at RCEP, you look at TPP, or the successor to that. The odd person out here is the United States. Also, India chose not to get involved, and so did Russia. So at this point, you know, the U.S. has more than just looking at China. They have to start thinking about where they're going to fall into this kind of a new world order. I mean, the WTO has been hamstrung. It's really difficult to see the U.S. going at TPP, and RCEP seems politically one step beyond. So how is the U.S. going to assemble its future? It's not always just about how China so far has had this kind of virtuous cycle. They've been able over the last 40 years to consistently plan, to look at the previous year, the previous 5 years, and figure out what they're going to go do next. And that has been very, very effective. You see what has happened with COVID-19, things like this. So China is now switching, hopefully, from less defensive position to much more leading the world. Remember, 1/3 of the world's growth is going to continue to come from China. And it's, you know, everybody is attaching their boat to it. You see the huge amounts of money that are flowing into China despite all this kind of anti-China rhetoric. So expect this to be the new issue, and especially in areas like the digital economy, where this is going to be a gangbuster. It's not only China's digital currency, but also all of the things that you can do with it. A CEO will now be able to literally see on a real-time basis how much money that they have and do much more constructive planning. So these are the things you should be looking at, not just China, U.S., but how the world is shaping up.
Yeah, indeed. And John, if you listen to what Einar has to say, there is a lot of room for growth in China. Let's talk about the pandemic and the way that China handled it, and it is really leading the way economically, but also in working to get a vaccine out there. What do you think is going to be critical in the first quarter of 2021?
Well, I think what's most critical for first quarter of 2021 is the rest of the world in terms of fighting the pandemic, in terms of getting vaccines to average folks. And I think China cannot have a very strong growth without the rest of the world recovering. And hopefully, and it's actually some good news that the vaccines are coming out. We're probably going to see vaccines, getting to the average folks even before the end of the year in the United States, hopefully. UK is already doing it. Some other countries, Israel is already doing it. So with the rest of the world recovering, I think there's going to be a lot more better picture for China's from China's perspective. And also here, we also have this vaccine, and if you look at the people who are actually being tested for the vaccines, mostly outside of China, we don't have many people getting infected right now, and we have developed a very mechanized, systematic approach in terms of containing those small mini outbreaks imported at the various entry points at this point, and it'll be quite successful in doing that. So I think this year is all about pandemic, and next year for the first quarter is probably going to be the same. And with that behind us, and then we can get onto the faster track of economic growth.
Liang, let's talk about, there was so much discussion about getting a phase one trade deal done between China and the United States. Then the pandemic hit. Firstly, where do you think that starts? Are there going to be efforts to really focus on that? And secondly, I saw you nodding your head yes when Einar was talking about, when you talk about the economy, it's much more than just China and the United States. What were you thinking?
Right. So for your first point, I think some of the panelists already talked about that. Trade policy probably is not going to be the priority of Biden's administration, at least not at the beginning. So I don't think that Biden is going to take up that trade deal and continue to work on it very quickly. And I also think that because he's taking this multilateral approach and more comprehensive approach for engaging with China, not just trade, not just technology, but human rights, et cetera, et cetera. So I think he's probably going to come up with some more a different approach, and trade would be just part of it instead of the centerpiece of the China's engagement. That's number one. And number two, I think it is true that we're coming to a multipolar world where it's not just the U.S. and it's not just China, and it's not only just the West making the rule and hoping that China will come along. So I think a lot of tensions now is that China is emerging as one of the leading countries in the world, and yet China is not being included on the table when make the rules. So I think that is very interesting when you talked about digital economy, when you talk about data privacy and other national security issues. A lot of times I think the standards have been pretty arbitrary, right? When the United States wants to ban a company or blacklist a company, they say this is a national security issue. But as a matter of fact, the US and EU are having a lot of the conflict and tensions about data privacy issues, etc. So I think it's a time for many of these countries come together and really make that multilateral agreement, and in the real rulemaking that include not only the Western countries like the European Union or the United States, but also BRICS, right? Some of the emerging powers. And I agree with Anna on that point.
Excellent. William, we're almost out of time, less than 30 seconds. There's an indication that Pete Buttigieg, former presidential candidate, could be the next U.S. ambassador to China. What do you think of that?
I'm a little embarrassed that relative to our previous ambassadors, who was so experienced and almost a friend of Xi Jinping, we get a newcomer to the scene. And his challenge is going to be to realize that China is part of the Pacific region, and there are challenges to China within the Pacific region. I mean, look at the last trade pact with ASEAN, where China and India's tensions caused India to drop out of that pact. So Buttigieg is going to have a lot of Chinese politics within the region to deal with, as well as to ensure that relations with the U.S. Are going to go smoothly.
He is going to have to learn quickly. William, thank you, and thank you to all our guests. That does it for this edition of The Heat. I'm Sean Calebs here in Washington, D.C. Thanks, everyone, for joining us.